Welcome back to part number 2, where in this video I'm going to walk and talk you through all of the key aspects that you need to be aware of ahead of your ACCA SBL exam for the March 2024 sitting. As you can see on the screen, we're going through the pre-seen information for Athletic Transcentral. If you haven't watched the previous video, feel free to check that out on the channel. And as always, if you'd like access to these notes, click the link in the description. You'll also find down there some affiliate links for Astranti, where if you were to purchase any of the links for a mock paper or a course, I would also receive a small percentage which goes to support the channel, but it's just for pure transparency, little things that I would recommend to help you to pass your examination. Well, in this part, we are looking at and starting from the income and expenditure. And if you've got these notes downloaded, you could make some notes on the side. But really, if football is not your bag, and this is where you're going, James, okay, I've just got to do my best. These are the cards that I'm dealt. Well, everything in these notes underlined are the key, real specific details that you can see here, that if a professional football club earns income, how do they do it? Well, they can get prize money for basically where they finish in the league and how far they get in a domestic cup. They also have ticket sales, individual matches and season tickets. Now, for your notes to add to this, we're not actually given the level or the amount of season tickets or individual matches, and it's also a KPI later on, so possibly something they could give you on the exam day. We also have other match day income, transfer fees on there, and this is where you have refreshments, hospitality, and some football stadiums now, as we'll see with what the competitors are doing of Athletic Transcentral, they're using it for music venues, conferences, and other means to generate forms of income on there. Transfer fees from the sale of players. We're not given any specific fees or names of players that have been sold or bought. Again, it could be something thrown in on the exam day, and if that was to happen, you'd need to look at the financial fair play aspects, which we'll come on to in a later video. Then we have the income from advertising and commercial sponsorship, where we can actually have commercial sponsors that actually can use the players and the brand on their own marketing. You can see on there, some clubs have sold the naming rights to specific commercial sponsors. And this is the key bit for your notes. If you get anything on advertising or sponsorship, it really falls into either 2 years or less, which for anyone who's not familiar with football, you can sponsor a shirt usually for about a year, or if you have a player that's at a football club, at the end of the season they may leave, and hence that sort of sponsor only has access to it for a year. But what you can see on there, most commercial contracts for sponsorships last between 2 to 5 years. And again, that's where it will be contracts about the naming rights, maybe they've named a stand, something on those lines. And it's worth noting as well, you'll see it in a later video, if you watch this all the way to the end for the whole series, actually Athletic Transcentral doesn't have a main sponsor. So again, something that could be definitely thrown in on the exam day for you to consider in your answer. There are a couple of other income sources you can see in the top right now, where we have income from the sale of club merchandise. So that's the shirts, the accessories. But the only major thing to note down here is you've got the fake kits that are sold on the black market on there. And you've got to consider, maybe out of those, you've got children's products, accessories, gifts, home items. We're not given any information about actually how or what actually in terms of the levels are sold. We're given a total figure in the summary graphs at the end. But the other key point to note down is in the club shop, they actually only have a small club shop and they have limited opportunities to sell these. So again, another opportunity, but they have a diversified range. There could be some future opportunities to look further afield and into other avenues. Income from hosting events other than football matches on there. So they've touched on other sporting events, music concerts, conferences. Other clubs who are competing against Athletic Transcentral do this already, but Athletic Transcentral don't have the sufficient stadium in place to actually put these things into practice. So again, something to note down, an opportunity for growth into the future, but if the club got relegated, I don't think they'd probably be able to afford it. We'd maybe be given some figures on the exam day. Television broadcasting incomes on there. Basically what I'd have in my mind is the higher up you're in the table, especially for the men's league, the more income that you're going to get, and the exclusive rights, and the more that you progress in the domestic cups. In terms of the agreed amounts or how often the clubs are played, the more they go into the competition and the contracts they have, the better off they're going to be on there. Television and channel incomes. Clubs can also receive subscriptions and advertising income from running their own TV channel. Actually on there for your notes, and I probably should have put it on here, is Athletic Transcentral do not have their own TV channel. Some of the other clubs do and are utilising that revenue stream. So again, another opportunity for you to get down there. We're then highlighting the club's main expenditure. So you've got a couple of bits on here, but much less. And we'll be given the employee salaries and benefits. This is, I know it's only just a little point there, but that is massive for football clubs, especially Athletic Transcentral. They mention it later on that the employee salaries are the main expenditure. And if you have a look at the graph at the end in the later video, the earnings before interest and tax and amortization and depreciation are on a downward trajectory, meaning that profitability is getting ever more tricky. However, the revenues of the club are only going up, even though the position of the club is actually going down on there. So these are the things you just got to wrap your head around, and hopefully the video is helping you as you go through on these. Now, this is the more sort of technical part in terms of the amortized costs, particularly for players. And this is where, if you're not into football, you've got to picture it in your mind. Think of a footballer who you actually might like on there. And that's where you have capital expenditure of an asset, which is a player. So let's take it, if we bought a player for this football club, Athletic Transcentral, for £10 million, it would go on the balance sheet capitalised at £10 million for the transfer fee at fair value, and it would be amortised on a straight line basis. So if we gave the player a 2-year contract, it would be amortised at £5 million. The person, would be amortised at £5 million per year for it. And this is where you can actually make a profit or a loss. You could, on the exam day, be given some figures for players that are sold and maybe for also bought in, that you might need to do some calculations on there. But the bottom line is the transfer fee less the accumulated depreciation or the actual accumulated amortisation of the players lead to the carrying amount. In other words, what value is that player sat on the balance sheet at on there? There are other expenditures, as you would expect for running a football club. You've got the stadium, the running costs, the depreciation, as I quickly touched on there, the property, plant and equipment. We're not given too much in terms of actual figures for these, if any at all, but we may be given a few on the exam day that you may have to total up or do some analysis on, or where they could maybe become more efficient. The television channel, costs of running their own television channel, if they do so on there, and the finance costs, well, as we've already said, Athletic Transcentral don't have their television channel, but it's the cost-benefit analysis as to if they were to, the subscriptions they'd get in versus the cost going out, would it be worthwhile on there? Lastly, we have the sort of finance costs, the stadium, the match day. Not given too much information, but could be factored in on the actual exam date when it's given to you. And this is where it comes into what is seen as financial fair play now. So financial fair play is where we have relevant earnings, and that is where we get a figure for the year. You can see it in the blue above me. For each year, we're either in a relevant earnings, we'll call it a net positive outcome or a net negative outcome. And what they're saying there is, in a nutshell, that the relevant expenses, that we have a minus figure, plus any relevant income, does that give us a positive relevant earnings or a negative relevant earnings? And they've given us on here all the different areas. You've got to be really familiar, especially with the profit on the sales. That is going to be critical, even if you're not quite sure on financial fair play. Do a bit of background research on it. Clubs can be deducted points from it. They can be potentially relegated on there. They could lose some of the trophies they've won. All these sort of things. But what it's deemed to do is to make the competition fair. So one of the ways to get around financial fair play and regulations to understand it is that, imagine you've got an owner who comes in. You had your Abramoviches of the past who own Chelsea on there. and you've got Sheikh Mansour at Man City. Again, I touched on it in the other video. Do not use real life examples in this exam, but it stops them just coming in and spending billions when it doesn't have a measure to actually use it as a proxy again. So in this case, we're looking at the relevant income versus the relevant expenses, and the measure is to say for that 3-year period, they've even calculated it down here for you, is that if it goes below, that you can see here we have -7, if it goes below -5 million, then you are in breach of financial fair play, and therefore as a result you could lose points, lose prize money, whatever it may be on there. And it's where, if you read between the lines, they've shown you how to calculate it, they've hinted at it, they've given us diagrams. I think it's definitely something you need to have in your arsenal going into your ACCA SBL exam, how to calculate it, and a hypothetical, so that if it did come up on the exam, it wouldn't put you off on the exam day. You'd go, oh, I kind of thought about this, and I kind of had a little working out about it, and I know the averaging over the 3-year period, how to work it out. So that would be my last nugget of information for this part, for part 2, that going away, do a little calculations, and I'll quickly put it on the screen now because we'll come on to it in a later video. But the figures for those relevant earnings, you can see here it's about 60, then it goes down to about 40, then it goes down to about 20. You could quite easily get thrown in your examination a sort of final 3-year figures on there that could take it into a negative position, and Athletic Transcentral possibly being in breach of financial fair play regulations. But that, ladies and gentlemen, brings us to close to part number 2. We're going to come on to the risks, threats, media coverage in part number 3. So if you have any questions, leave me a comment below. Be sure to like and subscribe so you get access to all the free resources. And if you want access to the notes, click the link in the description, and be sure to click one of the videos on the screen because it's only going to help you pass. So I'll see you soon, and thanks for watching as always. Cheers.